All right, welcome back to the Nadlin Forum Podcast Daily. I'm Ruby Sturt here with Leor, and today, well, it's all about mortgage credit. So, Leor, before everyone tunes out thinking, oh, credit indexes, numbers, boring, stick around, because even a tiny change here can actually open a door if you're looking to buy or refinance.
Yeah, exactly. And what we're talking about is the Mortgage Credit Availability Index, or the MCAI. It's kind of like a barometer for how easy or difficult it is for borrowers to get a mortgage these days. So a higher number, lenders are loosening up just a little. Lower, and things are clamping down.
Totally. And this August, the MCAI bumped up to 104.0. Not a huge leap, a 0.1% increase, which honestly feels about as subtle as an extra sprinkle of sea salt. But it does mean it's a teensy bit easier to snag a loan, especially compared to like the absolute lockdown vibes of a few years ago.
But we should say, even though there's a small improvement, it's still a really cautious environment. The index uses a baseline from 2012. So these changes are pretty modest in the grand scheme of things. But hey, any easing can matter for borrowers who've been feeling shut out.
And since we're swapping credit stories, Leor, want to hear about my first home buying run in Melbourne? Picture me standing in front of a stack of paperwork taller than my coffee table. And look, let's just say nobody was feeling generous with credit limits at the time. It was prove everything, reprove it, and then maybe you get a we'll think about it. So when folks say a 0.1% nudge is good news, I really feel that.
Yeah, the paperwork never gets any smaller, does it? Especially if you don't fit neatly into those boxes lenders love. So let's dig into the details. Ruby, you caught the breakdown, right? The big story this month is really about the conventional loans. Their MCAI was up 0.3%. It's not massive, but it does suggest lenders might be opening the door a crack, particularly to folks who aren't going through government-backed programs.
Yeah, and get this. The Conforming MCAI, the one for loans within government loan limits, grew by 0.7%. That's actually a decent bump. So if you're shopping for a house below the conforming limit, there's a bit more room to move, which could mean more competition or just more options.
But on the government loan side, so the FHA, VA, USDA stuff, the index dipped a bit, down 0.1%. I think that's a sign of continued caution, especially since lenders see those programs as riskier in a shaky economy. And jumbo loans, the supersized ones, were totally flat. No change. That says a lot about where the appetite is right now.
Honestly, it's almost like lenders have two moods. Meh, we'll test the waters with the regular stuff, but no sudden moves with jumbo. But something else is shifting too. Adjustable rate mortgages, or ARMs, kind of came back into the chat. The Mortgage Bankers Association pointed out the uptick in ARMs, mostly because rates are just so wild right now.
Yeah, so it's funny. Back in Israel in the late 90s and early 2000s, ARMs were everywhere. Like you couldn't talk mortgages without an ARM coming up. Here, after the crash, they went out of style. But now with buyers looking for better monthly payments, I guess they're peeking around the corner again. But overall demand is still sort of low compared to the heyday.
Right, and even with this little surge, ARMs are nowhere near taking over like they used to. Lenders are just being ultra careful, maybe dipping a toe but not diving in. And I mean, can you blame them? After the last few crazy years, everyone's a bit jumpy. But if you can navigate those changing offerings, sometimes you can find a gem buried in the options.
Yeah, and lenders have had to adjust. They cut staff and capacity because applications dropped so much since the refi boom ended. Now they're recalibrating, but still moving slow. It's all connected. Product risk, borrower demand, and the constant pulse of the economy underneath it all.
So, what does all this actually mean for you if you're buying a place or thinking about refinancing? Well, first, every tiny increase in availability could make a difference, especially if you're a first-time buyer in that conforming loan zone. Just don't assume smooth sailing. Lenders are still asking for loads of documentation and a solid credit profile.
Yeah, you gotta be ready. Paperwork, tax docs, sourcing down payments. Even with these small shifts, lenders haven't switched to yes mode overnight. But this is a good time to watch for small windows, especially if you've been sitting on the sidelines with a decent profile.
It's a cycle, right? Like before 2008, credit was everywhere. Everyone and their cousin was getting a loan. Post-crisis, it was lockdown central, and even in the 2010s, it felt pretty tight. If you're new to this, seriously, don't be surprised by the hoops. If anything, these incremental changes are like, okay, maybe we're inching back toward balance on the tightrope.
Absolutely. And even a little easing can have big effects for some folks. I know a family in Queens, right? They'd been locked out of a refi by just a hair. Now, with this tiny MCAI change, they found a lender willing to look at their case again. Doesn't mean approval, but it's a foot in the door, which is better than nothing.
Yeah, and that's why watching these indexes matters. A 0.1% change won't make headlines, but it could make your offer or refinance just possible. And if you're playing the long game, keep an ear out for things like ARM offerings shifting or lenders getting less skittish as market conditions stabilize.
Exactly. And look, for everyone listening, follow those trends, be thorough with your applications, and get advice early. The landscape could change again if rates or the economy do something unexpected. That's part of the reason we check in on this stuff regularly. It's about being prepared, not caught off guard.
Well, we'll keep tracking these moves every week, so make sure you hit subscribe. Leo, always a pleasure, mate.
Thanks, Ruby. Great chatting. We'll catch you guys next time. Stay sharp and good luck out there.